let's go to the exit strategies. Asking price per value 84.75%. That needs to come way down. Utilities per month estimate. This was set up in your default setup. The sales commission, again, default setup. Sales price modifier, default setup. This purchase closing cost percentage. This is calculated off of the actual. If you go to this purchase HUD 1 right here, then it will show what your closing costs are, and it's calculated. Sale closing costs. So therefore what you will see is that those who say use a fixed percentage cost for your closing cost, you'll find that that is not very accurate at all. It changes per house because there are so many fixed costs. And this is what it calculates as the probable minimum accepted short sale offer for the first mortgage. And again, it takes the after repair value times 90% less the repairs, and then multiplies that times the short sale threshold, in this case 80%. If there's any liens, record them here. And then here's your equity deal breakdown here. This is the asking price of $95,000. We don't have obviously a second or third mortgage since this is a bank owned. If there are any other costs or liens, it will go in here automatically from this area. The closing cost is being calculated by the HUD 1. MAO, maximum allowable offer, $48,655. If this were truly an equity deal, then you really don't want to, if that MAO right there is lower than the first mortgage, you know, you're depending on how much lower it is, you'll have to negotiate that. Repairs, again, auto entered. Insurance, auto entered. Utilities, taxes, holding costs from the lender, your closing cost on selling. There's your maximum loan allowed. There's maximum, that's your loan amount needed right now. There's your lender interest rate, your holding period. Again, as you see on this area right here, there's only 2 fields that you need to fill in. All the rest of this is auto-calculated here. This one right here, of course, that's where you would put in like your maximum allowable offer. In this case, $48,655 here. And so therefore, as you can see, then max loan allowed and loan needed then match up. But this is not going to turn green over here because it's not an equity deal. So let's take that out of there. Okay, so let's go to the wholesale assign. Here is the discounted first mortgage, approximately what think the mortgage will be discounted by the lien holder. No second mortgage, no third mortgage, no liens or other costs. Our wholesale assigned maximum allowable offer is $56,463. That is if you desire a $5,000 profit. So let's put in $56,463, and you will see that yes, your profit does go to $5,000. So there's your wholesale assign. This minimum profit acceptable is from the default setups. Let's take a look. Let's go ahead and put this maximum allowable offer in here. Let's take a look at the report. Here's one of the reports that you'll get. It gives you a full breakdown, gives you a full summary of the entire deal. Plus, you can go straight from here to your choice of contracts. Wholesale double close, basically about the same thing here. Discounted first mortgage, no second or third mortgage or liens or other mortgage cost. There's your wholesale double close maximum allowable offer with $6,000 minimum profit acceptable. Your closing costs, and you can look at that detailed by going to the Purchase HUD 1 settlement statement. So let's change this to 52, say let's just go 900. Get you $6,012. Again, select your contract, view report, and you can go to the selling HUD-1 settlement statement. You might have, if this house happens to be in good enough shape that maybe you can go ahead and just go ahead and sell it to a retail buyer. Maybe you'll have a sales commission in here, and so go ahead and change that and see what that does to your numbers. Next, we come to the rehab. Again, very little entry required. Price override here, holding period, which comes from the default settings. Sales commission for rehab, again, comes from the default settings. There's your discounted first mortgage, no second, third, or other cost or other liens. Your contract price, your rehab maximum allowable offer of $48,655. This is based, all these numbers are based off of the lender that you've assigned for this particular deal. As you can see, the lender that I'm using will do a 65% loan to value, giving me a profit of $22,854. As you see, the loan needed, max loan allowed, there matches up. $1,733 in closing costs. Let's go ahead and take a look at the HUD-1. As you can see, it's already all completed, auto-generated, cash to the borrower. This is when we purchase it, about $18,600. We're off about 3 pennies here. Scroll on down here, and here is the 5 points to my hard money lender credit report and other fees required. Total settlement charges $66.03. So let's go back. Rehab, exit strategy, estimated repairs $17,000, taxes $891, holding costs $10,200, utilities, insurance, selling closing costs. Again, you can look at the HUD-1 settlement statement, sales commission, and the sales price. You can adjust the sales price there by simply adjusting this sales price model.